Welcome you all. We will discuss on a very important topic. Income tax exemption for educational and medical institutions. Section 1023C and Rule 2BBB explained. Why universities, educational institutions and hospitals receive tax exemptions? You may get doubts. Why the previous blanket exemptions under section 1022 and 1022A were removed? Section 1023C was introduced to regulate tax exemptions for these institutions. The confusion and litigation around the term used is wholly or substantially financed by the government. Now I will explain the historical background. Before 1998, educational and medical institutions were completely exempt from income tax under section 1022 and 1022A if they were not for profit. But the issue came is issue of misuse. Some institutions took advantage of this exemption without genuine educational or medical activities. So then reforms came in 1998. The government removed these clauses to prevent misuse and introduced new provisions under section 1023C for institutions funded by the government. So the current tax exemption rules under section 1023C. Who is eligible for tax exemption? Institutions covered under section 1023C, 3AB and 3AC must be wholly or substantially financed by the government. So institutions must be wholly or substantially financed by the government. The exemption applies to universities and educational institutions if not for profit. Hospitals and medical institutions serving the public. Now, the key requirement is the government financing. If an institution is wholly financed by the government, its income is automatically exempt. If an institution is substantially financed by the government, not wholly, substantially financed by the government, it must meet specific criteria. Now the issue is the term substantially financed. It is not clearly defined. It was not clearly defined. Then it leading to legal disputes. Introduction of Rule 2BBB defining substantially financed. Why was Rule 3BB introduced? To clarify what substantially financed means. Before this, courts had different interpretations causing legal uncertainty. So what does Rule 2BBB say? According to Rule 2BBB, an institution is considered substantially financed by the government if government grants exceeds 50% of its total receipts, including voluntary contributions in a financial year. Hope you are clear. I'll repeat again. Rule 2BBB say an institution is considered substantially financed by the government if government grants exceed 50% of its total receipts, including voluntary contributions in a financial year. What is the impact of Rule 2BBB? Institutions receiving more than 50% funding from the government eligible for tax exemption. Institutions receiving less than 50% of funding, then not considered substantially financed, may need separate approvals for exemptions. Now the practical challenges and legal issues. Confusion over self-sufficient government institutions. Here the issue is coming. Some universities and hospitals are established by government but become self-sufficient over a period of time. They do not receive grants anymore but are still governed by the government. Are they still eligible for exemption is a big question mark. Answer is, if only financed at insertion and governed by the government, then they may still be exempt. But litigation arises due to lack of clarity. Issues faced by the institution in claiming exemption. Some institutions face rejection because they do not meet 50% government funding criteria. Even institutions wholly financed by the government sometimes face unnecessary scrutiny. Courts have given mixed rulings, making it a complex area of tax law. Key takeaways and summary. See who is exempt. Institutions only financed by the government or exempt from income tax. Very clear. Institutions substantially financed by the government, that is, receiving more than 50% government grants, are also eligible under Rule 2 BBB. Now, who may face issue? Institutions receiving less than 50% of government funding may not qualify automatically and need additional approvals. Government established institutions that have become self-sufficient may face legal battles for exemption. So, the final thought, if you run or manage an educational or medical institution, ensure compliance with Rule 2 BBB. If the government grant is above 50% of total receipts, claim exemption under Section 1023C, 3AB, 3AC. If only financed by government, tax exemption is still applicable even if the institution is self-sufficient. Like, share, and subscribe for more tax insights. Comment below if you have any questions. Thank you.